Hello and good morning, everyone. Welcome back to Almus Market Mornings, your daily dose of global financial updates with me, Swaraj. We start another week with action packed events lined up, starting, of course, with the US Federal Reserve meeting on the 1st of February, followed by ECB and the BOE meetings. Every central bank is expected to hike interest rates, while on the domestic front, our finance minister will be presenting the budget on the 1st of February. Data from the US is increasingly convincing the market for a Fed pivot. PCE released on Friday was broadly as per expectations. Euro, meanwhile, continues to resist 1.09 levels, while dollar index hovering between 101.5 to 102. So broadly, if you observe, markets are looking for new cues for next leg of direction. One another interesting development seems to be the firm up in oil prices. JK, what are your thoughts as we move into an action-packed week? Any thoughts or expectations from the Indian budget?
Good morning. A lot to expect from this week, of course. But we start off the week with China coming back from the Lunar New Year break, and market expecting a decent rebound in activity, especially in the services sector in China. In fact, China reported a sharp drop in COVID-related deaths during the holiday, though it is surprising in view of the higher level of travel that was there during the holiday period. And in fact, China's CDC says that the number of COVID-related deaths and severe cases at hospitals have declined by more than 70% from the peak seen in January. Also, look at the markets as we come to near the end of the first month of the year. What strikes is that US markets have done quite well despite all the talk of recession. Nasdaq in particular has posted gains in all the 4 weeks and gained more than 13% from the low of the month. And it is holding. It really reflects markets' belief that Fed is closer to a pass and possibly a cut later in the year, which they justify by pointing to the stream of weak economic numbers and a steep fall in inflation. We should recall that Nasdaq was hit ever since inflation rose its ugly head and Fed started to raise rates in March 2022. To me, it looks like it's poised to gain some more. And technically, we have broken the downtrend line drawn from the historical high seen in November 2021. That sets the tone for risk sentiment across markets, though it will not be a straight line move. But I think at least the first quarter, possibly, if Fed sounds dovish, can give the market a good boost. But if you look at the data of last week, it was definitely reminiscent of a Goldilocks scenario with growth better, jobs market strong, and consumption holding up, although it was down in December, and inflation of all the factors being lower. Personal consumption expenditure index, increased by just 4.4% from 4.7% reading in November, generating a 3-month annualized rate of 2.9% from 3%. That was the slowest annual rate of increase since October 2021, though it was also expected. On a monthly basis, core PC increased by 0.3%. That's also as per expectation. At the same time, consumer spending was less than the modest estimates, indicating that economy slowed down at the end of 2022 and contributed to expectations for 2023 recession. Also, the final reading on Michigan survey of consumer was better as both current and future conditions improved. And even the inflation expectations showed a drop. Markets will definitely hold their breath till we get through the most action-packed week of the year yet, starting with Eurozone preliminary reading on inflation, GDP growth in Germany and France, PMI surveys on manufacturing and services, FOMC then followed by BOE and ECB rate decisions, finally ending with the jobs report on Friday. In the meanwhile, we'll also have the Indian annual budget as well. So it's a lot to digest, and each of them can be big market movers, which means the assets will remain range-bound till at least the Friday. Yields moved little on Friday again. What we have seen is the Asian news like higher inflation in Japan and Australia have pushed up the yields, but they have actually died down in the New York session, coming back into the familiar range. Interestingly, ahead of FOMC meeting, former Treasury Secretary Larry Summers told Bloomberg News that the Fed should maintain maximum flexibility at the upcoming meeting, not committing to rate hikes, and at the same time, possibility of further rate increases should not be taken off the table. So Summers is now sounding quite neutral, but he is cautioning against complacency. Dollar, which has repeatedly found support ahead of 10150, that's the DXY, has shown some signs of recovery on Friday. But the closing and opening rates of the last week were in the form of a doji. This is just a technical jargon which indicates indecision of the market to move either way big. So the parameters are 10243 on the higher side and 10150 on the lower side. The break of either of these levels on a sustained basis will indicate the next direction in which the dollar will move. And of course, euro above 109 and the GBP above 1.24 have definitely found strong resistances. At least they will have to consolidate before they make more gains. Coming to India, with global markets calm, while the global markets have been calm, inflation easing, risk assets steady, and currencies strong to stable, Indian financial markets have been hit by turbulence. Although no spillover has been seen in the rupee exchange market, the sizable fall in equity markets, Nifty nearly 4%, and Bank Nifty 6% from the highs of last week, with a FII flow of more than 1 billion during the week, has dented the general investor sentiment. On Friday alone, the outflow was to the tune of 5,977 crores, which is one of the largest single-day outflow. Thanks to the actions of central bank, volatility in the rupee has been absent, and efforts to break higher have been met with good selling. Additionally, 81, 85, 90 levels are strong resistances on technical charts, which the traders have respected. Budget, then FOMC, stock overvaluation, and with all these, bonds can attract, but budget numbers will be important. All in all, a week in which some direction is to be decided for currencies once all the big numbers are out. Finally, a bit of unnerving news that Bloomberg reports that Israel carried out a clandestine drone attack on a defense compound in Iran. And as the US and Israel look for new ways to contain Tehran's nuclear military ambitions, so geopolitics never take eyes off it, and it's always lurking in the background. Thank you.
Thank you, JK. And just to sum up, China markets will be open post their Lunar New Year break, while markets continue to expect steep fall in US inflation and a Fed pivot. We saw US PC come in as per expectations, and US consumer spending a bit lesser than expectations, showing a slowdown, while dollar index continues to find support. While on the domestic front, Indian financial markets, we saw a bit of turbulence with sizable fall in equities, while rupee continues to be steady due to central bank intervention. That's it from us today. As JK mentioned, it's going to be an action-packed week. Keep managing your risk. Thank you so much for listening.